All right, Kettle Range Theory Trader back with you with another video, just talking about this 8 hour chart trick that will catch the New York reversal perfectly. So let's get into it. These are the rules. This is what you want to look for. You're looking for two 8 hour candles, the 1700 and 1 a.m. because when you have an 8 hour chart, you're only going to get three candles per day, right? The first two candles of the day have to be the same color, and ideally they are moving with size and direction. Okay, so two reds or two greens. All right, that's a non-negotiable. I wouldn't recommend doji candles or anything like that. You want to see two strong candles or at least one strong candle, right? Now, the 1 a.m. candle must create the high or low of the day. That is a non negotiable. After that happens, you're going to have two possible outcomes. Either the low is going to hold, okay, for that, the 1 a.m. candle creates, and the 9 a.m. candle is just going to reverse. Like it'll have a very shallow retracement and just start to move back and undo everything that the 1 a.m. candle did. Or you may have a new higher low that gets created typically between 9 and 10, 10:30, as late as 11, and then price will reverse towards the 1 a.m. candle's higher low. Or if you just want to scalp and do a quick 30 to 50 pips, that's about what you can expect. So if you do a 10 pip stop loss, you can expect to get 1 to 3 to 1 to 5. So that's one way to look at it. So this is the pattern illustrated crudely, right? Where you have the daily open price, you have the 1700 green candle and the 1 a.m. green candle and then 9 a.m., like I said, just retracing. For a short example, for a long example, again, you have the daily open, this black line, two red candles, and then a green. Okay, very simple, kind of hard to miss that. Now, if the lower high of the 1 a.m. candle, this middle candle right here, if that holds, right, if this holds, okay, your job is to become an expert at trading the 9 a.m. 8 hour candle and getting in ideally below the 9 a.m. open price if you're long or above the 9 a.m. open price if you're short. If you are not respecting, or if you're not respecting the, I'm sorry, if you're expecting reverse off the 1 a.m. higher low, just cut it at the first time it does not display that behavior. Here's one simple trick that you can use to let you know that the reversal may be underway. It's called the chain and state of delivery. Very simple. Please don't overthink this, and I'm going to show you two examples. All you have to do is look for the one candle that creates the high or low of the 9 a.m. candle, and then when price reverses or closes above it or beneath it, that can signal to you that there may be a change underway, right? I'm not saying it's going to work 100% of the time, but that's going to be your main signal that price may be reversing. So let's take a look at an example. This is a short example. This yellow box, this is a 5 minute chart. We take our entries on the 5 minute chart. This yellow box represents the first hour of a candle. You'll see here this red candle right here where the arrow is pointing creates the high of this candle. The next candle right here closes below it. That is your signal to enter. That's it. And as you can see, price trended down very nicely. That's all you're looking for. Okay, that is all you're looking for. If it doesn't close below this candle, typically it's just going to keep going up. And the same in the opposite direction. Okay, stop loss goes above the high. Okay, and then this is a long example here. This yellow box just represents the first hour of the candle. You'll see here price just went down. This is the low of the 9 a.m. candle. Now, the chain and state of delivery actually came all the way up here because price does have to close above this red candle because it made the low. So some examples will be more extreme than others, but it did create this big old fair value gap that's not labeled, but it is here. So all examples won't be this extreme, but this is the behavior you're looking for. Some closes will be big, some closes will be shallow, like the one I just showed you right here for the short example. Sometimes it'll be a small close, but sometimes it'll be a large one. But just because it's a large one doesn't mean you can't still make a little bit of money off of a move like this. Okay, so scheduling the day. This is all you're looking for. Okay, for the first 16 hours of the day, you're not doing anything. Okay, you may even be asleep or just watching TV, doing something else. You're only going to come to the chart at 9 a.m. Right? Because remember, you're only trading one candle. Right? Ideally, you're looking for your entries between 9 and 11. Okay, the first hour between 9 and 10 Eastern Standard is most high probability. Sometimes it may take up to 12 p.m. I strongly recommend that if you don't see a change in state of delivery or if your price doesn't start to reverse by 12 p.m., then forget about it. You might just be dealing with a trending market and it's not going to reverse anytime soon. Sometimes it may reverse on news, like if there's the Fed minutes in the afternoon or if there's afternoon news, sometimes you will see that. But for the most part, on any given normal random day, it's just going to be when this pattern plays out, you'll see it play out in these times. Okay. And then I don't recommend holding these trades overnight. This is just for one candle. So you want to be sure you're out of the market by the time market closes. So let's look at some real chart examples. Okay. So these examples are if the 1 a.m. closes. All right. I call it an imperfect candle range theory. Why do I say that? Because in the regular candle range theory, you want to see candle 1, candle 2, and then candle 3. Candle 3 is still our payout candle. However, if you notice here, candle 2 did not close inside candle 1's range. But that doesn't mean that we still can't take a trade if one presents. And in this case, one did, right? So let's take a look at this. But remember our criteria. We see 1, 2 candles of the same color. So we have 16 hours of one direction. So then when New York session opens, or this 9 a.m. candle opens, we just simply look for a undoing or a retrace against 1 a.m. That's all. That's it. That's the whole thing. Okay, it's a New York session reversal. Now this is the 5-minute chart. You can also, if you want, make a note of the chain of state of delivery for the day, because this 1 a.m. level did hold. But in terms of the candle, this yellow box here I have set up is just the first hour of the candle. The best entry would have been right here at 9:45. A fair value gap was created as well. This red candle right here did also create the low of the candle, and the chain of state of delivery, I wish I would have labeled it, but it is this green candle right here. That's your entry right there, and it did rise for 50 pips. That's done. That's it. Done deal. It's over. Okay. 2 red candles, you expect a green. I don't know how else to really explain that. All right. So here's another example. Okay. We have our 2 red candles here. Oh, sorry. I went back one. Okay. Here we go. So a short example. We have 2 green candles. So what do we want to see? A red. But remember, we have to see the high of the day created by the second candle. So it's right here. And if this high holds, then we want to see price open, go up, and then go down, reverse. Okay. Against the 1 a.m. So this candle right here, this price action right here on the 5-minute chart, is this red candle right here. Okay, price open, went up, went down. Notice on the 5-minute chart, it did retrace into a fair value gap from the prior candle. So that's always a good sign if that gap holds. So the best entry would have been at 925, and we did get a 45 pip drop. So that would have been beautiful. Okay, so just easy enough. So once again, if I see 2 green candles of size and direction, and this 1 a.m. high of day holds, I'm going to see if I get a New York reversal. Will they all reverse? No. So you want to be sure to control your risk. Okay, you may get 3 green candles in a row. Don't think you can't see that, because I'm telling you now it will happen. Okay, but that was that one. Now, if you get a new higher low of the day, this is just one example of this. So here's where you have 2 green candles, but then every now and then the 9 a.m. candle will open, create a new high, and then reverse. Okay. And your best case scenario, once again, for the take profit is going to be the low of candle 2, the 1 a.m. candle, if you are short, or the high of it if you're long. Okay. But in this case, it would have been the low. So as soon as you get that change of state of delivery on the 5-minute chart, that was right here where this blue line is your best entry. And you just hop on in. This was good for a 55 pip drop. That did happen at 10:30 a.m. Okay. Price rocketed up, created a new high day, and then it came right back down. All right. Okay. Now, obviously, we still trade the candle range theory as well. So you can also see candle 1, candle 2, which creates the low of the day, closes inside the range, and then candle 3 just expands to the upside. And this is the 9 a.m. candle right here, where this yellow box is. That's the 9 a.m. open. The chain of state of delivery for the 9 a.m. candle did happen right here. This candle created a low. Price closed above it, but you really could have got in on the fair value gap. Either one of those would have been fine. And then price just did a straight rise at 50 pips. Okay, but this is a regular candle range theory. So don't think that we're doing away with the candle range theory or I'm trading something. You will also see this as well, where you have 2 red candles and the candle range theory still plays out. It's the same basic idea. It's just the only difference is candle 2 doesn't always close inside candle 1, but just because it doesn't, there still could be a 9 a.m. pullback, reversal, however you want to look at it. Okay, so that is the whole system. I've given you everything that you need to be successful. You want to be sure to backtest this. I'll show you some live examples from a live chart right now. So let's take a look. That was a trade I was in earlier, but let's take a look here. So I'm going to show you some that are playing out in real time right now. Let me get the 9 a.m. indicator here. We'll just go through the 8 8-hour charts, and then the I'll just show you the 8-hour charts, and I'll drop down on a couple of them. So not to make this video too long. So we have 2 red candles, low of the day. All right, so then we drop down to the 5-minute, or 9 a.m. right here. Where's our change in state of delivery? Was right here. Okay, when price closed above it, it did also create a fair value gap right there. So remember, even though this was a severe close, this is where price closed above it right here at 10.10. It retraced into the gap, and then this would have been, if you entered on the gap, that would have paid out 50 pips. Okay, so even if it's a big close above for a change in state of delivery, you can still capitalize on it, and possibly maybe you want to get in a fair value gap. Okay, so that was that. I was actually in that trade, but I got out too early. Let's see. Let's take a look at a couple more. Pound yen also gave one. These were 2 dojis. And actually, this is a regular candle range theory, actually, believe it or not. You have candle 1, candle 2, closed inside the range. We'll just isolate that. The low, and then price just shot up. Okay, that's a regular candle range theory, so I got tons of videos on that. So I'm not going to drop down on this one because you guys, if you've been following the channel, you know how that works. But this is just a regular CRT. But again, 1 red, 2 red, reverse. All right. So that's, the yens are pretty much all did the same thing. This is one that may be playing out in real time, but the Fed minutes are going to be announced later, so it may or may not work. But this is one where a new low day was created. But this is dollar, so it may or may not happen. I don't know. Let me see. This was the low. And if we take a look at our 9 a.m. template. Okay, this was the first hour. This is the candle that created the low. So change state of delivery came right here at 10:30. And price is still kind of chopping around right now. So it may or may not work. Fed minutes are unpredictable. I'm not going to pretend to know what's going to happen on that one. Let's see here. That's a pound. The rest of these are all pounds, so I think they're all long, yeah. So see here, once again, 2 reds and a green. This is one where a new low of day was created. So you have that. I think all the pounds were doing the same thing, yeah. 1 red, 2 red, new low of the day here. And then lastly, pound Aussie. This is one where the 1 a.m. candle held up. So we'll take a look at this one and be done. So this was the 1 a.m. candle there. Or, I'm sorry, the 9 a.m. candle right there. A couple fair value gaps. Fair value gaps are always good for confirmation. Notice it did almost retraced into a fair value gap that was made during the 1 a.m. candle. The change of state of delivery on the 9 a.m. candle would have been really right here on this close. No, I'm sorry, actually on this one. This candle here created the low of the day. So this would have been the entry right here. Because as you can see, price closed above this candle. This candle created the low of the 9 a.m. candle. It's retraced into the gap and shot out. And let's remember that that is an indication of candle 3 behavior. So if this gap can hold, we may see more moves to the upside, or it may not. No guarantees with anything. But yeah, even on this entry here, right now, to the top, that would have been good for almost 30 pips. So yeah. But okay, but that's it. That's the whole system. I hope you can back test that. Hopefully that will help. I appreciate your time and attention. Have a great rest of your day. Take care.